Hey traders, Raghee here. Let's get a quick audio and video check in for our Charts and Coffee episode for Wednesday, December 30. 2020 is just about out the door. Great to see everybody. All right. Happy Wednesday, everyone. Not only to my folks on YouTube, but Facebook as well. So we are broadcasting on both the Facebook and the YouTube Simpler Trading channels. Great to see everyone. Okay, let's get to it. So, we rocked the TradingView charts yesterday, so I thought we'd go ahead and do that again today. And we'll take a look at the charts through this platform. I'm a big fan of this platform. Because, well, one, it makes a lot of markets accessible. The only someone asked me yesterday is there a market that I don't like to trade on this. I first started using TradingView mostly for crypto and Forex, and I still use it for crypto and for Forex. I do not use it for futures because then you've got to pay the exchanges to get the live data from the CME or the CBOT or the NYMEX, etc. And so I don't use it for futures. Funny enough, seeing how futures are one of my main markets, I use Thinkorswim. I'll use TradeStation for that. All right. So with that being said, let's jump into the session. Okay, let's see what we got here. All right, first up is, hey there, Kim says, I cut my cute hair. No, Kim, I haven't even done anything. No, this is it's almost a half day. This is, look, in my, this is, Rob, you're on camera. You really should put a little bit more effort into it, but thank you. Kim, I've been cutting it myself, but I did not this time. Hey there, Matthew. How do I like the DKNG setup on a daily chart? All right, let's jump into Donkey Kong as it's known, but DraftKings. I don't like DraftKings that much. I really don't. And here's why. And it's all because of what's going on down in here. And I actually don't need the XLC down here, so I'll just put in the SPY or something, okay? All right, so notice how DraftKings has just recently gone yellow. It was looking like an uptrend. It was looking like a very fresh uptrend, and it's kind of gone sideways again, which goes back to, one of the things we want to do is eliminate one side of the market in terms of a direction. So that means what I'd like to do is say, what side of the market, long or short, am I absolutely not interested in at all? What side of the market am I not interested in? And I'm not interested in the short side of the market. Generally speaking, for broader averages, definitely. But more specifically to DraftKings, no, I'm not interested in the short side. So that leaves, well, Rog, how would you get long, right? Do you see how before we start thinking about how we're going to trade, we're thinking about what we want to do. And what for me is, do I want to trade DraftKings at all? Are there other better uptrends out there? And then once I've decided, yes, perhaps I do want to trade it, pertaining to the question there, Matthew, then now it's going to really become an oversold buy scenario. So I'll use different automated tools like the Darvis 2.0. I could use some volume profile levels. And at that point, what I could do is determine where DraftKings is more likely to bounce off an oversold support level and get long. But it's long and long only for DraftKings for me. And thank you for the question, Matthew. All right. Sip of coffee today. We're doing some Honduras honey. Volcanica. Yeah, somebody asked where do I get some of my coffee. So you guys know I'm a big fan of the Death Wish coffee. They're finally coming out with a medium roast, which is nice. A lot of you said, hey, Rog, that Death Wish is pretty good, but that dark roast, oof. I concur. So this is a Honduras honey from the folks at Volcanica, which is actually quite good. So we're rocking that one today. All right, next question is Rishi. Hey there, Rishi. So I see a lot of regulars here in the room. This is fantastic. I love the love seeing the familiar faces and so forth. Love it. So thanks for your answer on not to hedge on individual double greens yesterday. Oh, well, gosh, yeah. I'm glad that helped. And gang, please remember this. And thank you for the mention, Rishi. Let me mention this. These are just my approaches to the market. These are just my tools. And in my opinion, it's by no means this, only way to play the game type of approach. I don't believe in that. There's a lot of ways to play this game. Just certain tactics and tools just aren't the way that I play. They're not my pitch. But thank you. I appreciate that. My question was for an entire portfolio. If I am long 10 double green, should I think of an overall hedge? All right. So this is how I would look at that. In my mind, watch list building and where you've entered a trend. So Rishi, give me I think you mentioned Amazon or Microsoft. So let's grab Microsoft. All right. So this is a market that is, generally speaking, moving higher. And this kind of goes back to what we were just talking about regarding Matthew's question. And that is regarding where you would get in. My need to not hedge has a lot more to do with where I'm not getting in, which is up in here, versus where I am getting in this case, which would be in an over. So this is the test. That's the first hit. That's your buy, right? This is kind of going back to what I was recommending that Matthew would do for DraftKings. Look at where that lower low, look at where that support level is. And then when you get that second opportunity, that's the opportunity, especially when you've got a yellow underlying market trend, okay? If I were habitually buying at higher highs, yeah, at that point, I'd have to put a seatbelt. I'd have to put a big old airbag on my portfolio. But I think a lot of whether to hedge or not to hedge, right? That age-old question that Shakespeare asked, to hedge or not to hedge, has a lot to do with your cost basis relative to where the market is now. Does that make sense, Rishi? So in my mind, if you've got exposure to a number of uptrending markets, you're betting on relative performance. And then depending on where you've entered those double greens, that's going to determine how you need to protect yourself, right? So I hope that helps. All right. PSW asks, good morning. What is the Facebook channel? Oh, Simpler Trading has a Facebook page. I personally have a Facebook page, and Charts and Coffee runs on all of them. So yeah, you can go to Facebook and search for Simpler Trading, and you'll find our Facebook page, our Facebook channel page, however you want to call it. All right, crypto and Forex. I'm a fan. Yeah, I am. So, it's kind of interesting. I don't quite know the question is there, Senk, but, in terms of crypto and Forex, somebody asked me about Bitcoin the other day. And look, not to be salt in a wound or anything, but look, gang, this is not the time to talk about Bitcoin, right? This is not when we discuss Bitcoin at all. And this is where you think about contrast. This is actually Bitcoin versus US dollar, which is the way Bitcoin is basically traded. The folks who get crypto are the believers in blockchain and Forex traders. And I believe that is your biggest group of folks, because my Forex traders will understand this. This is a Forex pair. It just happens to be so let's call it digital Forex, right? This happens to be a digital Forex pair. Bitcoin, gang, in the world of Forex then, and this is something I talked about back in 2016 when I first started buying Bitcoin, my cost basis, and this is not to be, my cost basis is in the vicinity of $400 because I understand the blockchain narrative. I understand trading currencies, and this is a twist on trading currencies. And if you understand reserve currency status, you realize that in the world of crypto, gang, Bitcoin is the reserve currency. Let the Doges and the Ripples and all that stuff come and go. Bitcoin is the reserve currency for Forex. And gosh, we could have an entire episode of Charts and Coffee dedicated to crypto. But if you're a fan, if you're a believer in this, heck, your cost basis is probably lower than mine, right? I really didn't start to see the value in Bitcoin until I started talking to my cousins who were in India at the time, still are. And at the time, they were saying, yeah, they're confiscating rupees. It was a big problem with the currency in India. And a lot of folks his age were actually buying Bitcoin. I thought, wait a minute, there's a sea change here in the way people are perceiving the value of Bitcoin. And that was back in 2016 before the election. So anyway, think about Bitcoin as the reserve currency of the Forex markets. And that's the way I view it. And I view crypto as digital Forex. And I think when you view crypto as digital Forex, it will make what happens in that space make a whole lot more sense. Okay. All right. Is it possible to take a look at NIO and CRWD? Absolutely. So NIO, double green, pullback buys. Absolutely. What are you looking for? You're looking for opportunities like this, and you betcha. And there it is. Just be aware of this. This is a lower, this is a high, lower high. You know, you can kind of see where the market's starting to struggle. We've lost a lot of that parabolic move. And, you know, when a market does go parabolic, right? When a market does start to accelerate, the way in which you trade it. Somebody asked me via email, Rug, so you don't momentum trade? Sure. But you've got to know when. You've got to know when. And you've got to know when to shut it off. And that has a lot to do with something called daily price movement ranges. And these are the kind of things that guide the way in which I trade options in stocks and options on ETFs, right? It's a big part of that. Oh, you know, while I'm thinking about it, and actually, we haven't released this yet. So you guys are getting a little inside scoop here. Let me share this with you all because you can actually register whenever you want. You can register now. Next Wednesday, a week from today, into the new year, I think this is one of our first webinars, free webinars here at Simpler. I'm going to be going into a lot of the detail of kind of what I just alluded to, you know, why we would look at certain market structures, how it is that I enter options on ETFs and stocks and things like that. So check that out. You can sign up now. We haven't officially released the link, I don't think, but we will probably soon. You can check that out. Save yourself a seat. We're going to be doing this next week, Wednesday, 8 p.m. Eastern. And I'm really excited for that. simplertrading.com/hour. All right. So, I didn't mean to do that. Let's bring back our charts. So NIO is an example of, you know, be aware of this, my friend. But yes, I'm also aware of being a little bit more conservative about getting long. I would not get short. But the question is there something that maybe would be better than NIO? And that's a really tough question. And that's really where my trading starts, which is at the watch list level, gang, at the watch list level. All right. The other question is CRWD. And gorgeous uptrend, finally pulling back. Look, I'm all for, look, this market went parabolic, okay? It is now retracing, which is great because that's where the opportunity would be. The question is, where is the opportunity? I'd probably be a bigger fan of waiting for something closer to 180. If we get a little bit more by way of activity at the 21 EMA level, you can be a little bit more aggressive at the 21 EMA. But overall, I'll wait for this market to trade back down into the wave. Okay? And that's CRWD. I like the structure of both of those to the long side, for sure. All right. Next up is let's see. Thoughts on the NAS into the new year? I'm very bullish, Michael. I'm very bullish. Yeah, into the new year. Absolutely. I'm going to continue to be, which is why I've been so adamant about, look, now let's be specific. The other day I talked about the different types of rhythms. Let me show you this. There's a seasonal composite. Let's talk specifically the NAS, shall we? There's a seasonal composite that allows us to look back 5 and 15 years. And here's your 5-year look at the NAS. I'm not saying that this comes no matter what, but take a look at the left side. This is basically as we start 2021, right? What is the tendency? We see movement higher into the end of the year. You can call it the Santa rally. You can call it the window dressing rally, whatever you want to call it. We tend to see strength into the end of the year. And then we tend to see an unwind that accelerates about mid-month. So that earliest I would expect would be around the 9th, somewhere between the 9th and the 17th of January. And that's where into February, March, I'm going to look for those opportunities for longer term, because if you look at the seasonal tendency, we might have a bunch of opportunities to take advantage of longer time frame, longer time horizon buys, as you can see there. So be patient. Yeah, be patient. The beginning of the year, year after year, is not exactly smooth sailing to the upside. So I am a fan of getting long. I am a fan of finding those relative outperformers. You know, and that takes us kind of back to what I'm going to be talking about next Wednesday, which is, you know, what it is. And this is probably the most important part of the conversation. Your watch list, gang, right? I mean, your watch list. And I'll talk about, you know, my P&L through 2020. You know, look, if you could trade 2020, you saw every kind of market behavior there is. So 2021, let's say it's just as wacky. Well, you've already seen what the market can present. You've already seen that the market can be as volatile as a 2008 type meltdown. And you could see the market could be as bubble-like as 1999. And you can see, you know, a lot of the different personalities that we've seen in the market by way of market trends and the extreme of those market trends. We've seen examples of all of it in 2020. So if you've been able to navigate that by understanding underlying market trends, like we emphasize here in Charts and Coffee every day, there's really nothing 2021 is going to present that's that unusual, except I did read this. Attached to that giant stimulus bill, which is just under 5,400 pages, 5,400 pages, that stimulus package that just passed. Attached to that, not in the actual text, but in the committee comments, there is a plan to release, I think, in 180 days, what the government knows about UFOs. So if you're expecting 2021 to be normal, think again. I think we're in for another weird one. True story. Not making that one up. All right. So, hey there, Michael. Watch your ETF video just a little while ago. Thoughts on particular ETFs into January? Yeah, Michael, it's the same idea. And thank you for the question that I would look at regarding any index or any stocks. I'm going to, just like I would pick stock versus stock in terms of relative outperformance. And this kind of goes back to, you know, what I do in the Sector Secrets Mastery Program, which is how do we build that watch list? And yes, we can build a watch list at the index level. Do I prefer the Russell right now? I really don't, because of the seasonal tendency to pull back into the end of the year. I am a big fan of, because we're in a reflation trade, commodities. Talked about corn and soybeans the other day. But as far as the sectors that I'll prefer, just like I will do that kind of comparative analysis between different stocks, I will do it between different sectors. So you better believe I'm going to be comparing, you know, the consumer discretionary versus communications versus energy versus financials. It's the same idea. It's going to be all about the relative outperformance of those individual sectors. Absolutely. And by the way, double green still rules the day. Yeah, double green still rules the day. Okay. How can I access the double green trade flags on TOS? Jan, a lot of my tools are free. As I mentioned, there's a number of tools that I do make available on TradeStation and TOS. And then a lot of them are free to members. So, and mostly for reasons of having to support their installation and use. But the ones we have for free on the most platforms are Darvis, Grab, and Propulsion. And then some of the trade flags, or even this tool down at the bottom that shows you the history of the JT trend. If you're a member of the Simpler Options Room, Simpler Futures Room, or if you're a member of my Mastery program, they're in the room drives. So if you're a member of Simpler, you know what that means. They're in the room drives for our trading rooms. Okay? All right. So with that being said, if you haven't already, do check out the free webinar that we're having next Wednesday. So for some of you, this might be your first webinar with me. You can sign up at simplertrading.com/hour. And I'm going to go over a lot of this, what it is that I did in this particular account, which was, I'll talk about words like budget and affordability and scaling and things like that. But my typical position size, gang, was about $2,400. We'll talk about some concepts that maybe you haven't thought about in terms of improving your trading. So I'm really actually super excited to kick that off. All right, gang, I am flat out of time. I tend to run over on Wednesdays. My apologies. But thank you as always for joining me for our Charts and Coffee. I'll see you guys tomorrow at 9 a.m. And absolutely, Robert, I'll see you later today over at the Simpler Trading Futures and Sector Secrets Mastery Rooms. You bet, Robert. All right, gang. Have a great one. Be good to each other.